This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 154, brought to you in association with Smart Pension. And I'm delighted to be joined today. Well, I'm actually joined today. He's on the other side of Skype, and all my wires are not really working, so we'll see how it goes. By Julian Cork, COO of Landbay, the UK's top fintech buy-to-let mortgage lender. In the last episode, we had a strategic overview of how the government response to the COVID virus will change society, the economy and liberty. In this episode, we dive down from 30,000 feet to much nearer the coalface to hear about the realpolitik of life in a fintech right now. As we've covered before, Landbay, one of the London Fintech Podcast's favourite UK fintechs, has a great model having a belt and braces approach to risk, both loan-to-value coverage on the property, but also income coverage for the mortgage payments. As a result, Landbay, who were launched in May 2014, has originated over £500 million to date with an astonishing 0 defaults, which by anyone's reckoning is a good performance. However, as the saying goes, the past is not a reliable guide to the future. Whatever your model of risk is or isn't, it definitely doesn't include a historic period of house arrest for billions and economic destruction. So, let's dive into the UK property market, buy-to-let, and a practical case study of how one of the best fintechs in London is responding and having to adapt. Plenty to talk about, so let's get on with the show. Good morning, Julian. Thanks for joining me today.
Good morning, Mike. How are you doing?
I'm doing very well, actually, and I was just reflecting that it's a few weeks since we met, and when we met, as I recall, we shook hands and we had a drink with some other sort of people at some little event in London, and I think that's probably only 5 weeks ago, and it was what we might call what we used to think of as the normal world, and one or two things have changed since then.
Certainly have. I think that was at the kind of outset of when people were starting to think about what does social distancing mean. They had hand sanitizer on the entry point, but everyone still shook hands. So, yeah, certainly things have changed significantly there. And, I'm very thankful myself because I'm decided because we're going to have no guests, I've converted the spare bedroom into an office. So I actually have a bit of space in a room, in a house full of teenagers and school teacher. So it's a challenging time.
Absolutely. You definitely need to get your space in those circumstances, as many other people have found. And talking of shaking hands, I mean, it was at the stage where people would stick their hand out and they'd shake it and then they sort of discreetly try and sort of wipe it on their bum or something in case they picked up the virus. There's a bit of anxiety. And a few days later, I went skiing, which was very aborted. But there was a bizarre sight that I've never seen in the sort of loos at Heathrow, which is of men queuing up at the basins to wash their hands after doing their duty.
At least one good thing will come out of this, then.
Yes, exactly, and I quite like the theory or the model at the moment, or the observation that actually what caused the peak allegedly may well have been social distancing, i.e. anti-social distancing, and people washing their hands more thoroughly, but we will get to see about that. So I was going to go off skiing and have a nice time and come back and do stuff on my book, and you were busy about to go off to hospital to have your knee made bionic or something like that, and then presumably after a couple of days off work you were going to go back and be normal. So what actually happened after I saw you?
After we last met, I had some knee surgery, which has been a resounding success and very useful because now I can go out and walk the dog in this lockdown environment. Managed to get back to the Landbay HQ in Victoria for a few days before we decided to shut up our physical shop and move everyone back home. So, yeah, it's been a busy journey since then because there have been huge amounts of changes across the whole mortgage market. And, we've been very lucky, I think, at Landbay because obviously being a new fintech, our platforms, our voice over IP, everything fully in the cloud. So it meant that there's some of the drama that a lot of legacy firms have had about moving to a fully virtual environment really haven't been there for us. But there's been an awful lot to keep us busy within the mortgage and buy-to-let market in the UK.
Yes, as we were noting before, certainly based on my observation, a simple two-factor model is that over the last few weeks you've had two categories of people, one of whom have been busier than ever, doing whatever, even if it's just putting out fires or sort of just shuffling stuff around and things like that, or we go to a delicatessen around here that just won the award for Kent's best delicatessen, and this guy's built up his business over a long, slow period of time. Part of the square is the estate, actually. They make champagne, 2,000 acres of it on the North Downs around here.
Very nice.
Yeah, very nice. But anyway, this guy, very slow start to business in the usual way. You know, like the Beatles were an overnight success, but first they spent 10 years in pubs and clubs and every dive paying to one man and his dog. And in the same way, this business began some time. And this chap has only taken one day off in the last 5 weeks. He's absolutely shattered. You know, the turnover's gone through the roof, as you might imagine, so they're exhausted. So there are people like you and him who've been really busy. And then there are people like me and many others I know that sort of the wind just disappeared from the sails and all the plans went out the window and they got a little bit distracted. And it's quite hard to find people who are in the middle, actually. So the other thing, of course, is that when you're busy, time flies by quite quickly. So you probably feel it's not that long since I saw you. Whereas for me, it seems like sort of another lifetime.
No, one of the challenges about having your office in your spare room, though, is that you tend to work ridiculous hours because you just think you're going to go in and check something or just send that one email or just Skype that one person, etc. And you find you've been working since 6:30 in the morning when you woke up and suddenly it's lunchtime, you know. So, you know, it's getting a good balance. And you know, one of the things I liked was the commute was a good barrier between home and work, and that's just merged completely. Luckily, this weekend I managed to turn off everything and not have that interaction. But it's been the first one for many, actually.
Yes. Well, there's lots of things that one just does in life, and like commuting, it seems a pile of hassle or something like that, something you'd rather not do, and then you don't do it, and you find it had quite a positive side effect. So it's quite some time since I worked sort of 5 days a week in London, but the same thing. It was a half a mile walk to the station here, half a mile at the other end, and it would just clear your head and settle, and by the time you got home, you were much more sort of calm, centred, and back in the home mode. But I mean, of course, with writing this book, I mean, I was getting it for 3 months in a row at 4:30 in the morning. It's crazy, you know, just sort of writing and all that kind of thing. And I think that everybody finds ways to adapt. And one of the things I found useful is now you've got your sort of study set up, which is to implement a rule that you will only work in your study. So at least there is some way you can shut the door on, and you know, and that's it.
Yeah, absolutely. I think that's a very, very wise idea.
Right, so in terms of how did you get to where you are today, we've sort of covered the last 5 weeks very briefly. Before then, what was your career journey, Julian? I think I remember one of the first interactions we had some time ago was that you said you'd listen to the London Fintech podcast while walking around the Australian outback or somewhere kind of far away like that.
Absolutely. It's when I first really got into Fintech. I was based in Sydney and I was working for Macquarie Group over there. And I was going on large walks around the bush listening to podcasts and I heard your dulcet tones explaining what was happening in London right now in the world of T-shirts and suits, bridging it. Yeah.
There were rather fewer T-shirts than there were. And presumably you were just sort of doing the modern version of the Aboriginal walkabout in the desert, and they listened to the ancestors to guide them countless thousands of miles, whereas you actually listen to sort of podcasts and all that kind of stuff. And in the same, exactly. in a parallel way, actually, I presume that listening to podcasts, just like the Aborigines listening to ancestors guided them, did actually, in some part, guide you towards fintech and thinking there's a different world. And
so I'd as a graduate, I joined JP Morgan and moved into their technology group and worked for there for 15 years, actually, until I became a managing director there, and had always been in fintech, but it was obviously never called fintech because it was working in the technology of a large investment bank. I've had a career in basically JP Morgan and Macquarie Group, and in both I've been either kind of in the technology space or running technology-enabled businesses. So, for example, in JP Morgan, I headed their global derivatives services business that does valuations of esoteric derivatives using all the computer models that we'd developed within the investment bank. So various different roles like that. And I had a real opportunity as I was coming back from Australia back in 2014-15 to join Landbay. I'd known John Goodall, who's the CEO of Landbay, for many years, and we'd been talking about what was happening in the fintech space. And I turned down a job at another large investment bank and moved into to be employee number 8, 9 or something in Landbay, and haven't looked back. Actually, it's been great. And the great thing about fintech, I think, is that you can get involved in all sorts of different pieces. So obviously get it very, very busy in Landbay, but also because I've got a lot of experience working in larger investment banking organizations and big teams and global setups, etc. I've been able to secure a number of different advisory board memberships or non-exec directorships on other fintech companies as well to help other people as well. It means that you have a really kind of wide range and it keeps you very interested.
Ah, excellent. Well, apart from the fact that I know you've got a copy of the great book, I will now actually spend sort of a little while selling you a great book.
Opportunity to plug. Fantastic.
Absolutely. So I can get another post-tax half a pint of beer profit out of the book. There's not much margins, but also I'd have to wait quite a long time for that half pint to be poured. So diving into the mortgage stuff, and let's putting all the sort of the COVID stuff behind us at the moment. Mortgages, property, yada, yada, yada. It's something that everyone's sort of vaguely aware of. In FS, as I've said many times, there are many silos, and we're vaguely aware of most of them, but only vaguely aware. So somebody like me, for example, is vaguely aware that the government, in its perpetually infinite wisdom, last year or the year before or something, started to crack down on buy-to-let lending, i.e. disincentivise it one way and another, which is pretty crazy, as if you're young or if you're middle-aged and not so well off, it's next to impossible to buy houses in London and things like that. So they then disincentivise people buying them to rent out, thereby reducing rental supply, all of which seemed a little bit mad to me. Unsurprisingly, my knowledge goes about that far in terms of what's happening. So maybe you can tell us, let's just call it before Christmas last year, before the world completely changed, what, in a nutshell, was going on in mortgages and buy-to-let and UK property, just to give us all a bit of a background context for what's actually now happening.
Okay, excellent. So some context on the UK buy-to-let. So private rental sector housing accounts for nearly 20% of UK housing stock. So that's about 5 million units. And that's actually been growing quite a lot since 2006. And the amount that is in private rental sector versus public rental sector has been overtaken recently. So according to RICS, the surveying guidelines, about 1.8 million additional rental properties are going to be actually required by 2025. And so the government changes that you spoke about earlier, things like changes to mortgage interest tax relief that came in 2017, where the interest that individuals are paying on their mortgages is no longer going to be able to be offset against tax. Increased stamp duty. The government put in an increased stamp duty, an additional 3% for buy-to-let and second home purchases from April 2016. And a tightening of the PRA guidelines for buy-to-let also came into play, where there were stresses on interest coverage ratios from 2017 as well, and additional underwriting for portfolio landlords, i.e. people who have a large number of different properties, looking at the affordability of those as a whole. As you spoke about at the beginning of the podcast, we look at loan-to-value coverage and interest income coverage. So the ICR stresses are something we've always done. But those other changes to the market have seen some big shifts in the buy-to-let world, actually. So, a couple of things that come out of that. The changes to mortgage interest tax relief means that while historically individuals owned properties and claimed tax back on the interest that they were paying, they're unable to do that anymore. So what we've seen is a growth in limited company borrowing. So people set up their own individual limited companies and use those to purchase the property so they can actually affect the interest tax relief, because that's under company law rather than property law.
Again, I sort of vaguely aware of many things and not really aware of anything in particular, but I think I'd seen a comment along the lines that the net impact of all these changes had been to dissuade the person who's got one flat or one house to rent out, and more, not persuade, but has moved the market into people who've got more portfolios. Is that the case? Or if I want to buy a flat and rent it out and get a buy-to-let mortgage tomorrow, is it still okay that I can do it, but I have to put it in a company, of course, which is a pile of hassle and has overheads in itself?
Yeah, what we've seen is the proportion of kind of professional landlords borrowing has increased significantly. So if you look at in the kind of world of buy-to-let, 17% of landlords have 5 or more properties, and that actually equates to over or nearly 50% of all the tenancies that are out there. So you have a strong weighting towards those portfolio landlords. About 45% of landlords today have just one property, and that's about 20% of the tenancies out there in the UK. So you can see that there is a strong weighting towards more and more professionalisation of this market. And that's kind of linked also to the stamp tax duty changes, because if you're adding an additional 3% onto your purchase of your buy-to-let property, you need to be thinking about it from a long-term cash flow perspective, as opposed to thinking about it from a capital appreciation of your house perspective, because you're already 3% down before you even started. So a lot of individuals who would individually buy a buy-to-let house and think about the appreciation of the underlying property asset would be dissuaded by the additional stamp tax. And so that professionalisation had some real positives, because you can see that the quality of landlords tends to be stronger for portfolio landlords, and so therefore renters are getting better service and better properties. So yeah, there are some shifts there as well. But the big thing that's out there is the shift in terms of the type of buy-to-let that's out there at the moment. So right now, I think there's about £260 billion worth of buy-to-let lending in the market, and of that, about 30 billion is kind of specialist buy-to-let outstanding. And so when I talk about specialist buy-to-let, and that's the area that Landbay really focuses on, that's buy-to-let properties that are held within special purpose vehicles or the limited companies. That's portfolio landlords, and that's also properties which are houses of multiple occupancy, like student houses, or multi-unit freehold blocks, i.e. small blocks of flats. So out of the only about 10% is specialist. Now we think that over the next 5 years or so, the buy-to-let outstanding debt is going to grow by about 4% to just over £310 billion. But the specialist piece, because of all these tax changes and because of all the things that are happening in the market in terms of underwriting guidelines, etc., the specialist piece is probably going to grow about 20%. So we think that by the beginning of 2025, you're going to end up with a outstanding buy-to-let lending of about £310 billion, coupled with £88 billion worth of specialist lending. So that's been significant growth in that space by over £50 billion. A big shift, and that's driven by these legacy changes. And I'm sure we're going to go back onto a little bit on what are the ramifications of the current market on all of this stuff. But because of strong underwriting capability and really thinking about the affordability testing and stress testing whole portfolios rather than just individual properties, it means that the market tends to be slightly more resilient as well.
Okay, so net, what we're seeing there, and let's not waste time on how the government has made property inaccessible left, right and centre for people in terms of buying and the challenge of rental. But net, we're seeing the sort of shift, you might call it institutionalisation, that we've seen in other areas of fintech and other areas of P2P, which P2P started being for the people, one individual to another individual via Zopa in 2005. But before you know it, it's institutional funds and all that kind of thing. So there's a big strategic thing going on there. So just very briefly, as I did mention, your astonishingly impressive 0% default rate in the past 5-6 years. Very, very briefly, and just very simplistically, because nobody knows, what are people just generally saying about how this is going to impact property prices going forwards? I was actually wondering the other day whether sort of premium wines like sort of Premier Cru Burgundies, which has long since got far too expensive for podcasters like me to buy, might actually start coming down. Are there any sort of forecasts that the housing market's going to go up, down, sideways, or is it still that nobody's got a bloody clue and hasn't really thought about it, other than waffling about it in some random article where they don't really know?
Well, I think that's the £1 billion question, really, isn't it? Because when you've got no price transparency, because you've got nobody buying and selling, it's impossible to really tell what the pricing looks like. What it does mean is it makes it extremely difficult when you're underwriting new property debt to understand what the loan to value coverage should be, or what the mortgage income payments should be for rental on that as well. So because you've got that huge slowdown, you've got zero price transparency. I've heard estimates from the kind of small 5% dip and positive next year over all the way to a 20% dip over a more elongated period. But frankly, anybody who's giving estimates is just guessing, right? People do not know. So we've got to get to price transparency to really understand what the market's looking like. What I can say is that there is going to be pent-up demand. You've got buyers and sellers in the market who will want to do transactions, and you have underlying demand in the UK buy-to-let market because you have underlying demand for rental properties in all regions across the UK because of the affordability of housing. So, the demand side of the market's there and the supply side of the market's there. It's just making sure that these two are going to come together, and the expectations of each in terms of discount and requirement for return are actually met. And so one hopes that standard market economics will come to the forefront of this to help us get to a stable housing market once we're in a more normal situation.
Okay, so again, strategically, linking back to what I said last week, I didn't say too much about liberty, but I think one of the issues there, which is easily forgotten, is that one of the things about liberty is that you do have a free market. You have a market with transactions, and a market with transactions gives you some prices, and from those prices you can do things like calculate risk, etc., etc. It's very much harder when we're into almost what you might call a sort of Second World War command and control economy at the moment, where the government does things like, well, I don't know if it's banned them, but basically there are bugger all property transactions going on, but also then it says, we can have mortgage holidays and things like that. We've almost dropped out of a free market system, which purely from the technical perspective of somebody whose job it was to calculate risk in the past, means that, to your opening point there, you can't calculate risk because nobody knows. If I was sort of sitting at the top of Kleinwatts these days or whatever, my sort of advice to the chairman would be, nobody knows, chairman. So on these mortgage holidays and all this kind of stuff, I did stand in front of a Polish lady a few weeks ago outside the delicatessen, and she had a house in Wimbledon that she was renting out, and she and her husband were renting another property somewhere else. They've got tenants in their own house, and what the government's done is destroyed both their businesses. They got no money coming in, they couldn't pay their rent, and they were in a bit of a tricky spot. Poor people, that was weeks ago, I don't know what happened. So I can't quite remember, doesn't matter too much, but did the government do something like, a 3-month mortgage holiday? And what about renters? What happens with renters run out of money right now?
So in the home-owned mortgage market, the individuals are able to have a mortgage holiday, and it should be very clear, it's a holiday, it's not a stopping of the interest. The interest still continues, and you're still going to be paying the interest at some stage. In the buy-to-let space, though, the very important thing is that mortgage holidays are also mandated, but it's to pass on the benefit to the renters. So if the people renting properties are having difficulty, then the landlord can ask for a rental holiday that then gets passed back to the underlying renter. So it's not to make the landlords have a break. It is to help the people renting the properties. Okay,
so just the obvious question then. So let's say I own a property, I don't have a mortgage on it, and my tenants have lost all their income and they can't pay. Is there any protection against them being kicked out by me?
There is a moratorium in terms of taking action against tenants for 3 months as well. And so landlords aren't able to do that, and lenders are not able to do that to landlords who are not paying their mortgage.
I see. So in a sense, things are frozen, although, as you say, behind the scenes, the interest is still clocking up. Okay, so that's the kind of macro-y stuff. Let's go nearer to the coalface now in terms of Landbay. Again, I mean, it's sort of calmed down, I'm glad to say, but at the beginning of all this, the government was coming out with a PRE announcement a day, furloughing and investment funds and this and that and the other. And, one sees sort of take-up rates of 1 or 2% on some of these schemes and all this kind of stuff. So there's a usual gap between policy idea and 6 o'clock news soundbite and actually what happens in reality. In terms of you guys, the extent you feel sort of able to share it, how have some of these micro initiatives affected you? Or is Landbay so busy you haven't had to bother sort of furloughing people or anything like that?
So the changes in the environment have had a big impact on Landbay in a number of different ways. So Landbay makes most of its revenue through annuity revenue from its ongoing servicing and performance fees for its mortgages, but it also obviously makes money upfront for each time we complete a mortgage. And so with the volume of new mortgages going down, because you can't actually do physical valuations in this environment, and a lot of our funding partners require us to do a physical valuation, you see a slight reduction in revenue from that perspective. So what have we been focused on? We've been really looking to make sure that we can continue to provide a great service for our brokers and for our borrowers and service the mortgages, etc. And so doing a lot of work in that. Well, of course, we've done a lot to manage the cost base as well. So we have furloughed a number of different staff as well, mainly in our underwriting and some of the sales and phone support and a little bit in technology. All areas where if you've got new mortgages coming in, if you need these people, but if you don't have the new mortgages coming in, which we don't at this stage, for a significant reduction, we don't need those staff. We've also done a couple of other things. Everyone's taken a small salary reduction, and that's helped increase the runway for us. And it's all about managing risks so that Landbay can be really successful on the other side and be able to bounce back quickly as the demand comes back there as well.
I think one of the challenges, particularly in the UK, I think other countries, or most countries perhaps in Europe, have been a little bit better in terms of giving some visibility going forward, is that given our mono-obsession with the NHS and the COVID and the government refusing to give any indication going forwards, we're very short of some plan which enables businesses to plan. So, for example, whether it's a good, bad or ugly, let's say that the government comes out and said, well, okay, in 3 months' time we'll be fully out of lockdown and that'll be it. If people get sick, so be it. But we've got plenty of capacity in the NHS, and you can't get rid of the viruses from society, so be it. And over the next 3 months, in the first month we'll open restaurants, and the second month this, and the third month everything goes back to normal, then at least a COO like you and a board that you sit on could sit there and actually have a plan for several months. But when we're travelling in this fog where literally we don't know what someone's going to spit out tomorrow, for example, Dominic Raab suddenly spat out 5 tests out of the blue, which changed everything. It must be like driving in fog. In a sense, you can't drive quickly in fog because you're always worried you're going to have to stamp on the brakes because you might suddenly hit something.
Well, we just got to plan for the worst and hope for the best. One of the ways in which we're working, and we're working very closely with our board on, is to make sure that we're in a good position for a zero revenue coming in for the rest of the year, so that then we can have upside off the back of that. So it's about being kind of working with our team, working with the partners we've got out there, we're looking at other areas where we can bring forward revenue, etc. There's a lot of things to keep an exec team very busy in this stage.
No, absolutely. I'm merely thinking that the impact of having transparency versus zero transparency. In the zero transparency, as you say, it's a bit like we're stuck in a boat in the ocean and we're heading towards, say, South Africa. We've got 5 gallons of water, and we say, how far is it? Oh, no idea. Oh my God, what can we get away with? So we try and drink sort of 1 cup a day or something like that. That's very different from saying we're 3 weeks to go, and then you sort of give yourself a bit of a margin and plan for 4. Anyway, hopefully that will all become clearer.
Yeah, and the best thing to do in that boat situation is make sure you're continuing to travel in a straight line and know where you're trying to get to, and that's what we've got to try and do.
Yes. Right, okay, so just to wrap up the main course in terms of what life is like at the coalface for a COO, we've spoken about these abstractions like business model and all that kind of stuff. I don't mean them to mean it in a negative fashion whatsoever. Abstractions are all very good. You've mentioned sort of technology. Technology is also very good. But as quite often one has to remind people in the tech world, none of that would actually happen without human beings. And going back to you being pretty busy the last few weeks and being sort of more becalmed, and some of your staff being furloughed and some of them being really busy, how are the sort of the wetware challenges going? How are the challenges with actually, from a different perspective, a company is a small society. It's a tribe of people. How do you look after your tribe's morale and all these issues?
Yeah, it's such an important point, Mike. And the key thing here is around communication. As the environment changes, you've got to put in place a whole bunch of new different operational processes. For us, we've had to think about non-physical valuations, how you deal with payment holidays, how do you do new reporting for all our different stakeholders, etc. And you've got to link up with your staff to do that. So we've been very lucky at Landbay to have very highly engaged staff at the moment. We've been really active on getting feedback. We use some great tools, things like Office 5 and HiBob, that mean that we can really understand the pulse of how people are feeling in our staff, and putting in place things like our weekly stand-up meetings that we used to do physically every week. We're now doing over Zoom twice a week. It does mean that there's a lot of kind of pull communication required from staff. So we've used things like Slido to make sure the exec team get asked questions and make sure the exec team are accountable to our staff for communication and answering what they need to know, and using all the tools at our disposal. But it's non-stop active communication to make sure that staff stay very engaged.
Yes, which in a way I think of as perhaps putting oil into the engine. And I'm thinking of one example, which obviously I can't say where, but one of my things that I've seen for many, many years, I don't know, about 15, is this idea that technology solves everything, and a diminution of the nature of what it is to be human, all of which sounds abstract, but I'm thinking of one example of a small firm, much smaller than yours, far less successful than yours, where they're all very techy. It's a very tech-driven firm. It's not in fintech, very tech-driven firm. And because they're very computery, techy type people, they tend to view abstractions like, oh yes, well look, we're communicating now, Julian. But from a sort of greybeard perspective, the human aspect is very easy to underestimate. You know, you and I could chat on the phone once a week for the rest of the year, but it's completely different from meeting, just actually being people together. And in this particular firm, it seems to me, and I've seen this in other firms in the past, long before this current craziness, is that it is easy to underestimate the importance for human beings of getting together physically in one space, and there's so much greater bandwidth by actually just being next to another person or opposite another person at a table compared to, you know, digital communications. So I'm wondering whether your communications and that have helped to offset this, or whether you're getting some examples, and you tend to see this in the old days anyway, even in merchant banks before this technology stuff, communications with overseas offices, you'd talk to them and frictions would occur over a period of time, and sooner or later it was very necessary for one side to actually physically go and meet the other and go out for a beer or dinner or lunch and really interact in a full human sense. What's your feel on that dimension?
Well, first of all, I think I'm very, very much looking forward to the post-lockdown going out for dinner, lunch and beers and things again. I do think that there are a lot of things that can be done online, and you know, the importance of, painful as it may be, to do a lot of online video meetings where you can actually have the social interaction cues of how people are looking at you, interacting, nodding, etc., as opposed to the less engaged telephone-only interaction is a very positive thing. And what was also really important is it's not just, you know, top-down communication from exec teams. You need to do it at every single level within the organisation and have much more bespoke and relevant content for individual groups. And so one of the things we've been really doing is making sure that each exec checks in with their team on a daily basis and, you know, does the virtual equivalent of the wander around the office saying good morning. You know, it's such an important thing.
Yes, that last bit is quite important, because when you're using the word relevant, of course, absolutely, I agree 100%. But also just from an anarchic, chaotic perspective, it's a bit like this essential. You know, I said a message the other week. I think I'd seen this someone say on online, there is no such thing as an inessential worker, which I thought was a really nice way of putting it. And going back to relevant and irrelevant. So let's just use the coffee room metaphor. At work, in a normal world, you're in the coffee room, you're just sort of chatting, you're talking bollocks, you're talking crap or something like that. It's very easy to be too kind of academic about this and regard that as irrelevant or inessential communication. And my point, just in terms of over the medium term, the longer this goes on, the more companies are going to have to think about this, is just the human nature. There isn't such a thing as inessential communication or irrelevant communication. You know, meeting you in the coffee room and taking the piss, or, you know, saying how you're going along, hopping along, is a social lubricant that actually connects people. So if one goes to the situation where all that happens is one has business conversations online, you're losing that kind of social glue, shall we say. So that's a vote for irrelevant communications.
And it's something we've tried to address by having social WhatsApp groups and business WhatsApp groups, and the same with Slack channels, so that you can have that banter and, you know, sharing things that aren't business relevant, even though you're talking to your business colleagues, because it is such an important level. Excellent.
Right. So before we wrap up the show, I'd like to thank all the listeners out there. Last week I did a giveaway. This time I'm going to ask for something in return. Last week I did a giveaway of the first 3 people to contact me. I do some free board mentoring for. I was contacted very rapidly, I'm pleased to say, and very much enjoying speaking to 3 of my listeners and trying to help them in a small way with their board challenges. This time I'd like to ask, for the first time in 6 years, the listeners for a little bit of help from 1 or 2 of you, if you don't mind. Insofar as I mentioned all the kerfuffle on social media, and these days you say something, you get assailed. I actually did an innocent tweet, I thought it was an innocent tweet, on LinkedIn, on Twitter, saying that I thought a Supreme Court review would be quite good. Anyway, somehow this went viral, I think, largely because the person I was responding to had no idea whatsoever, runs a website called Conservative Woman, which clearly appears to have lots of fans, using the word fans in inverted commas. Anyway, I had a sort of another hate review on London Fintech at iTunes, which was complete fake review. Now, to an extent, in social media, one has the saying that haters are going to hate. They are. But I've just asked a few of the lovers to love a bit. So if any of you out there are feeling particularly well disposed towards the London FinTech podcast and use Apple and iTunes, then it'd be quite nice if you kindly would just do a review. It only needs to be a short one, just so that anybody coming to iTunes can actually find out that I'm not a complete Nazi. Or one of the fake reviews in the past actually said I said that women should only stay at home, which actually made me laugh, because if I had ever suggested that to any of the women I've been with, I'd have got biffed. So anyway, last week was a giveaway. This week is a shout out, a takeaway. I also like to thank my brand partner for the podcast, Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. So, Julian, you've given us an excellent coverage over the last 10 years of the mortgage market, the changes, the challenges, especially in terms of risk, one of my interests, and also the practicalities and some useful tips on how to manage a business and human beings and staff in these circumstances. Would you like to give some shout-outs, information to the listeners about whether you want some more sex, drugs, rock and roll, or anything like that at Landbay?
Well, I don't think it's sex, drugs, and rock and roll, but it's two things. It's Landbay's vision is to be the leading buy-to-let lending platform, and that means that we really want to be the go-to lender in that space and a default option for our brokers. So my first shout-out is for our brokers to make sure you're looking at the Landbay site and your sourcing systems for Landbay's competitive mortgage products and our great service. And the other side of the marketplace, we want to be the partner of choice for those that want to invest in buy-to-let mortgages. So my second shout-out is for institutions, where Landbay's direct forward flow institutional investment opportunities are very strong and give an opportunity to directly invest in UK prime buy-to-let mortgages.
Right. Okay. Well, as I said at the beginning, you guys are one of the London FinTech podcast favourites. John's been on the show a couple of times. You've been a third, so there's very few companies that have done 3 appearances. You've got a brilliant track record. We're all living in an often overused word, but not in this circumstance, totally unprecedented times. I'm very interested to hear what you guys are doing. I'm hoping for all of our benefits that the government starts looking at the many factors it needs to balance, rather than being obsessed with one. And in particular, I think the thing which for the quiet ones of us, in terms of business-wise at the moment, is easy to forget, which is that abstractions like the economy and GNP and blah, blah, blah are abstractions. But actually, what is required sooner rather than later is getting all businesses some certainty over where they're going, so they can stop being planning for cautious, and getting everybody busy and creative and getting out there and moving it all forward. So let's hope, Julian, that it's not too long before I shake your hand again and we have some drinks. Although... actually, I've been trying to take a bet out with various chums of mine, but nobody will take a bet out with me when handshakes become commonplace in business meetings in London. Most people sort of are going down the sort of never again format, so it'll have to become Japanese and start bowing, but I don't know.
Mike, I'm very much looking forward to meeting you again for a beer, and maybe not shaking hands though.
Well, we can bring some washing up gloves up to the elbows, or those gloves that vets use for sort of delivering calves when the sort of things aren't going so well, and cover ourselves in wetsuits. Anyway, I wish you and Landbay every success in the future. So thank you for that.
Thank you, Mike. Stay safe.
Thanks for listening. If you have any challenges or needs with your unlisted company board, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a bend there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. the mountains and the trees. Can you see what I mean? Can you see what I mean? And we fade in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye, wave the city goodbye. Watch the firelight dance with me, 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 watch the firelight dance.